With his latest deals, Trump once again hit the US auto industry, this time to avoid a powerful economic blow Japan had been secretly preparing. There was no crisis, no direct threat, but Trump suddenly decided to show strength and threaten Japan with a harsh 25% tariff on all cars. He was convinced Japan would back down. Instead, he triggered a chain reaction that nearly collapsed the US economy. It all began with a conflict involving one of America's most important allies and largest creditors. Japan didn't panic. It acted. Behind closed doors in Tokyo, negotiations began. The Prime Minister remained silent throughout the election campaign, but after his party lost, the masks came off. It was time to respond, and Japan knew exactly where to strike. US exports, 840,000 American jobs, and over $1 trillion invested in US bonds. That's when Trump blinked. In a rush to prevent a blow, he gave Japan everything it wanted, a softened deal. Tariffs were lowered to 15%. Japan won, and American workers were left without protection. For Detroit, it felt like betrayal. Ford, GM, and Stellantis, all three giants were furious. Labor unions are calling it a disaster. Japan got better terms, stronger guarantees, and a surge in stock prices. Meanwhile, US manufacturers now face higher tariffs even when selling cars within North America. So let's break down what this deal really means, and why it could mark the beginning of the end for the American auto industry. It all started with a reckless mistake: Trump's threat of a 25% tariff on all Japanese car imports. It was unwise and poorly calculated. Japan cannot simply be forced to comply. It's a strong economy and a major investor in America. But Trump ignored all of that and picked a fight that could have easily been avoided. Japanese companies provide jobs to thousands of Americans: Toyota, Honda, Nissan. They have massive plants in Texas, Ohio, and Kentucky. They invest billions into the local economy, paying taxes that fund schools, roads, and hospitals. Without them, many towns wouldn't survive. But Trump didn't think about that. He wanted to appear tough and force Japan into a new agreement. He was sure they'd fold, but he was wrong. Japan was outraged, and in Japanese culture, respect and honor are not empty words. Trump's threats were seen as a deep insult. The situation worsened with elections. Japan's ruling party lost its parliamentary majority, and many voters blamed the US for humiliating their leaders. Under pressure and frustration, the Prime Minister gathered his advisors and made it clear Japan was ready to strike back. All options are on the table, he said, and it wasn't just talk. Japan was seriously considering selling over $1 trillion of US government bonds. As the largest holder of US debt, such a move could crash the bond market, spike interest rates, and trigger a financial crisis. The damage would be enormous. But that wasn't all. Japan also raised the possibility of pulling Toyota, Honda, and Nissan out of the American market. That would have been devastating. Nearly 1 million jobs lost, billions in tax revenue gone, and US export chains shattered. The entire American auto industry would be thrown into chaos. That's when Trump realized he had gone too far. The White House scrambled to contain the fallout. In the end, Trump backed down, agreeing to 15% tariffs instead of the threatened 25%. Officially, it's a new trade deal. In reality, it's a retreat. Japan seized the initiative. The media is praising the agreement, calling it a win-win, claiming both sides came out ahead. But the reality was very different. The United States did not negotiate from a position of strength. It surrendered to avoid disaster. Japanese automakers got reduced tariffs, market stability, and a boost in stock prices. American automakers got nothing. No tax relief, no new guarantees, only empty promises. Trump did not protect American jobs. He put them at risk. He did not secure better terms. He created a crisis, then tried to sweep it under the rug. Now Detroit is outraged. Japan is celebrating victory, and the United States looks weaker than ever. The response from American automakers was immediate. Ford, GM, and Stellantis, through the American Automotive Policy Council, condemned the deal with Japan as a failure, and they had good reason. While Japan secured reduced tariffs of 15% on cars and components, American companies still have to pay 25% when importing from Canada and Mexico, where much of their manufacturing is based. For years, American brands have struggled to compete with Japanese rivals abroad, and now, even at home, the playing field is uneven. with potentially irreversible consequences. Just look at the numbers. In 2023, Toyota sold more vehicles in the United States than any American brand. It surpassed Ford, GM, and Stellantis not just in sales volume, but in reliability, fuel efficiency, and customer trust. Toyota and Honda now dominate nearly every segment, from sedans and hybrids to crossovers and even pickup trucks. Their cars last longer, cost less to maintain, and hold their value better. Exactly what matters to buyers in the US and worldwide. Meanwhile, the US auto industry is in deep crisis. Ford's profits have been falling for 2 years in a row. Electric vehicles are draining budgets, while traditional divisions are barely staying afloat. GM is laying off workers, cutting spending, and delaying new model launches. Stellantis, the parent company of Chrysler, Dodge, and Jeep, is quietly retreating from global markets. This is not growth, it's a global pullback. Some brands are barely surviving. Chrysler, once a giant, now sells only one minivan in the US, and its future is uncertain. Buick, owned by GM, is almost entirely reliant on sales in China. Lincoln, Ford's luxury brand, is losing ground to Lexus and Acura and has become a shadow of its former self. Now imagine all these companies suddenly facing a 25% increase in the cost of parts. Most of them still depend heavily on imported transmissions, electronics, batteries, and sensors. That kind of price spike hits immediately. Meanwhile, Japanese automakers, who have long built factories inside the US, avoid these costs. Their supply chains are stronger, their production more efficient, and now they benefit from more favorable trade terms. And this isn't just about profits. If even one major American automaker goes bankrupt, tens of thousands of jobs will be lost. These companies support entire networks of factories, suppliers, dealerships, and service centers across the country. Whole towns in Michigan, Ohio, and Indiana depend on them. If Chrysler or Buick disappears, entire communities will vanish with them. On the global stage, the outlook is even worse. In Africa, Asia, South America, and increasingly Europe, consumers are choosing Japanese cars, known for reliability, efficiency, and easy maintenance. American cars, by contrast, are often seen as bulky, expensive, and outdated. And now, with tariffs pushing prices even higher, entering those markets becomes nearly impossible. So here's the question. If the American auto industry can't compete at home and can't expand abroad, what's left? And this is no longer just about cars. It's about one of the last symbols of American manufacturing, slowly collapsing under the weight of its own policies. Was this deal really meant to protect the industry? Or was it just another political stunt that spiraled out of control? Even union leaders are now joining the chorus of criticism. Tony Toddy, head of the local UAW auto union chapter in Ohio, was blunt. Japan doesn't buy American cars. So what's the point? His stance is clear. If the US does not secure better terms, this is nothing more than a giveaway. And the numbers speak for themselves. In 2024, Japan imported only 16,000 American vehicles, while the US brought in over $40 billion worth of Japanese cars and auto parts. The new agreement does nothing to address this massive imbalance. Toddy also warned that the deal with Japan sets a dangerous precedent. It weakens America's position ahead of trade negotiations with Canada, Mexico, and especially China. If 15% tariffs become the new normal, the US could lose its remaining leverage, and China is already preparing to flood the world with ultra-cheap electric vehicles. Many now fear that the Japan deal will serve as a blueprint for future concessions. So how can the US hope to compete if it keeps giving away its strongest cards? Now let's look at the real losses. General Motors reported that tariffs alone cost them $1.1 billion just in the last quarter. By the end of the year, they expect losses of around $5 billion, not because of declining sales, but because of trade chaos and border inefficiencies. That's money that could have gone toward new factories, research, or jobs. And this isn't just GM. The entire industry is bleeding. Uneven tariffs, rising material costs, unstable policy, all of it is squeezing profits. Trump claims tariffs protect jobs, but the data says otherwise. American companies are paying the price, while foreign competitors reap the rewards. So who's footing the bill? Not Japan, Not the White House. It's American consumers. Automakers are now stuck. Either absorb the cost themselves or raise prices. And car prices are already near record highs. Any new inflation could crush demand and trigger a wave of layoffs. And that's only part of the problem. The biggest threat is unpredictability. Trump's policies make long-term planning impossible. Investment is slowing. Innovation is stalling. Factories aren't hiring, not because demand is weak, but because the future is uncertain. And now something even bigger is coming. A deal with China. Industry experts are panicking. If the Japan agreement becomes the model, China could walk away with even more. China's market is massive. Its manufacturing is heavily subsidized by the state, and its electric vehicle sector is about to flood the world with ultra-cheap cars. That's why unions are sounding the alarm. If Trump offers China similarly soft terms in exchange for vague investment promises, the US could lose its electric vehicle ambitions before they even begin. China doesn't play by the rules, and now, thanks to Trump's mistakes, it knows exactly how to win. Trump is now pointing to the promised $550 billion in Japanese investments as a victory. But let's be clear, most of that money comes from old, previously announced projects. These aren't new dollars. They're mostly from private companies, not the Japanese government. And there's no guarantee these jobs will be unionized, well-paid, or even permanent. The threat is real. If this continues, the American auto industry could face a collapse from which it may never recover. And this time, it won't be because of global markets or foreign competition. It will be because of Washington and political games that went too far. So if you want to stay informed as this unfolds, don't forget to subscribe and turn on notifications. See you in the next video.